What's up, everybody? For now, I just wanted to cover some stuff since we didn't have a tape reading stream this morning. I wanted to cover some stuff regarding the 950 macro and how it applies to the AM session trade setups, and then just some general tips about lower time frame charts and things like that. Obviously, we had a bearish week, and every week, by the way, on the 1 hour chart, you're going to have a market maker model, at least one every week from Monday to Friday, either from previous weeks or all contained within the single week. So obviously this week we were trading from the previous couple weeks, the sell side of the curve over here. So buy side of the curve, we have the sell side of the curve printed from this week. So we'll go into the macro stuff, and specifically for the 950 macro. So the things that I like to look for when we're applying the 950 macros, obviously the normal kind of tape reading tools. Like we want to see SMT, we want to see a higher time frame bias from the hourly chart or 15-minute chart. You know, your 15-minute wick, either from stop run or from a fair value gap traded into. But the thing that's important to notice for the 950 macro is you need to look at the, why is this so big? You need to look at the 5-minute and the 15-minute order flow to help determine where that 950 macro is likely to displace towards. And obviously it should be in line with your higher time frame bias. So we need to have, first of all, a 5-minute or 15-minute order flow that confirms or suggests where the 950 macro will provide an entry for. Occasionally there's going to be 5-minute displacement, but you want to see 1-minute displacement all the time. It needs to be a high time frame bias paired with it. And then occasionally we're going to have a 5-minute CISD, but this is going to be later. But I guess the main topic is the 950 macro rarely will change the state of delivery that the order flow already is suggesting from the 5-minute and the 15-minute. We will either have a CISD before the 950 macro, or order flow will already be supported. So using that, if you just look at the 5-minute and the 15, obviously there's going to be context. You have a much larger, directional bias of where it's likely to go to. So I'll take today's example for instance. So obviously we're trading into this premium IRL. We had sell side targets from the hourly chart, the daily chart, and then the London low. But I want you to notice, as soon as we approach the 9:45 and 10 a.m., we have a bearish order block here that price is respecting. So with the context of we have a stop sweep with the candle body closing lower, and we have order flow that is bearish already, you can obviously assume there's going to be 1-minute displacement and then a premium imbalance, preferably we're trading into during macro time. That you can reach into. And this is not cherry picked. If you actually go in, I'm going to go into the notion from the previous couple months and we'll look at some examples. But all this stuff is very, very similar. So this is from Thursday. We already had a CISD prior to 950 macro and we're respecting the bearish order blocks. So as we retrace back up during the macro time, let me go back to the 1-minute. You can already be assuming you're looking for shorts, especially if there's something like SMT. And we have already a higher time frame bias. So it goes to show you that if you're trading against the 5-minute order flow, and if the 5-minute is not clear, it's going to be the 15-minute. It's only going to be those two time frames. So right at 950, the series of events you should be going through is obviously what's the higher time frame bias, and then where is the order flow suggesting to. And you can also time the displacement that'll give you an opportunity for the retracement during the macro. So the macro is between 950 and 1010. But your displacement will happen most times between 941 and 950. So just like how there can be two Judah swings from 930, occasionally you have just one manipulation and then you trade lower like this. Other times you'll have two manipulations, kind of like today where you have maybe one Judah swing and then a second one, and then we kind of break lower like we got today. You want to wait for that first 15-minute candle to print, and then the order flow should be pretty clear by that time. if you keep going to these examples, obviously you have a displacement here from 940 to around 954, and then retrace back up into premium, and you have an imbalance here with the 5-minute order flow bearish. If you go back to Wednesday, if you go to the 5-minute really quickly, there is no reason we should be looking for bullish movement. You have a bearish order block here on the 5-minute. If you go back to the 1-minute chart, where does your displacement happen? Between 940, where's 941, and 950, which we don't really have a clear displacement in here, but you have SMT with the Judas swing happening at 930, and then a premium for value gap that obviously lines up with the macro time. And then obviously if you're looking for your AM session ranges, if there's no 8:30 news specifically, if there is 8:30 news, it'll be slightly different, but mostly the same. But if you're looking at your open, high, low, close, just between 9:30 and 10 o'clock, sorry, 9:30 and 11 o'clock, if you're bullish, you're going to have your open at 9:30, and your timed low will happen between 9:30 and 10 o'clock. And the timed high will be between 10:30 to 11 o'clock. Now, what can you do with this information? Well, if there's a reason where we should continue to displace, you can obviously hold until time, and this will reach into a 15-minute or 60-minute PD array, and that includes liquidity or imbalance. So if we've not reached into a 15-minute or 60-minute imbalance or a liquidity pool by the suggested time, and say we put in if we're bullish, say we put in a high at 10:20, and that PD array is still not traded into, you would assume, as long as everything is still, the order flow is still in your favor, 5-minute order flow, 15-minute order flow is still in your favor, and we have not created SMT at the highs, you would assume that high that was placed at maybe 10:20 will be ran out and will reach into that 15-minute or 60-minute PD array. So we've had multiple examples this week where this same exact kind of the same exact application of the problem has produced itself, where we have an open, a high, and then we have a low put in at the wrong time. We have 10:12 here. And this is not just pulled out of nothing. This is from, I think, I want to say month 10 of the core content. If you go and watch the month 10, it's either month 10 or month 7. I get those two mixed up. I think it's month 10. You can go and it's the same exact stuff, but it's an important piece that a lot of people skip over. So this time here is at 10:12. Well, we already have our manipulation. We already had the SMT. We already had a macro entry. So we need to put in a low within a 15-minute or 60-minute PD rate at that time. Yep, this will all be recorded. I'll post it later today. What's up, Soup? How you doing? I haven't seen you in a minute. So 10:12, you can assume this will be ran out, and obviously we do run it out at 11:05. And if you go back to the other examples from this week, here you have a low put in at the right time. This is between 10:30 and 11 o'clock. So you can actually trust this low, doesn't need to reach back into it. But also notice how our 15-minute PD array, in this case, was the sell liquidity from London session. So that's why we're going to reach back into that. But if you go back and just look at all the stuff that forms, if I turn this on, nope. If you put like a kill zone indicator on and look when those high and lows are formed, it's going to be around that same exact time every day. If it doesn't form at that time, it'll normally be retraced back into or ran out during lunch. So here you have a low put in at 10 o'clock, it runs it back out at 11. Here you have a low put in at 10:30, runs it again. Here you have a low put in at 10 o'clock. Let's actually go back to this. What day is that? Tuesday. Let's go to Tuesday really quick. We'll look at the 5-minute order flow and then do the same exact kind of analysis. So here you've got 15-minute chart, runs, stops right at 9:30. Look at the candle body. Look how the candle body closes below the buy side liquidity. This is normally a good indication of a smart money reversal. If you're looking for reversals in price action, the wick needs to be the one that runs the sell side or buy side, and you want to see that candle closure below or above, obviously, regarding whatever side you're looking at. Here's a good example of a turtle soup, basically, is what it is. But at the time you want to see it happen, you have a run on stops, a closure below. And then if we go into the 5-minute, notice how the 15-minute order flow is bullish, right? We're holding the bullish order box. You have down closing candle range here. You have a down closing candle range here, down there, and it's holding that the entire time. What do you need to see? Well, since we're bearish after the sweep, there's probably some SMT at the highs as well. I don't know what chart it's from. If you go to the 5-minute, you need to see a change in state of delivery before the macro. The latest it's going to be is 10 o'clock, and you'd still have 10 minutes after. But normally it's going to be right at 9:50. You'll already have your change in state of delivery. If it's 8:30 news, sometimes it can be after. But for this example, where's our bullish order block that we've been holding? Well, it'd be this one right here. Notice how we close above it. So that confirms it as a bullish order block. You preferably also need to see a fair value gap that's going to confirm your order blocks as a high quality order block. High quality order blocks will always have a fair value gap next to it because that just indicates the displacement leg after. But order block closes above, taps into it multiple times. Look at the candle bodies all closing above. And what we do, we run it, and then we trade lower, and we close below the bullish order block. So then this becomes a change in state of delivery. And what time does this happen? At 9:45. So now our order flow on the 5-minute is bearish. So there's no reason, unless there was some crazy SMT or some news coming out, that we would expect to go long in the situation. Obviously, you still need to have higher time for buys. You still need to have all that kind of stuff. But then when you start pairing everything up, you have low resistance liquidity over here. That was not swept by the 8:30 news. You have a change in state of delivery on the 5-minute chart. You drop down to the 1-minute. You're going to have a breaker that's formed in the process right in here. And then you're going to have a fair value gap. It doesn't, remember, in breakers, you don't have to see it trade into premium. So your two entry types are going to be either a trade into discount or premium of the dealing range, or it's going to be a breaker. And these are really the only two setups you'll ever need, like entry criteria you'll need, because if you're trading reversals, everything outside of these two is going to produce more often than not a more difficult trade, and sometimes it's going to either stop you out prematurely or it's going to be a low probability sort of entry type. So these are the two that you're going to be looking for. Either, and I'm simplifying this a whole lot, I'm saving a whole lot of time just by giving you these two, and if you just go back and watch all of ICT's content, it's the same kind of stuff, right? For value gap and premium or discount of the dealing range, or a breaker it does not need to reach back into discount in this case. Okay. So with those two in mind, you have that 5-minute change in state of delivery, low resistance liquidity. You have a fair value gap here in discount of the dealing range, but it's held by the breaker. And then what time does this run into it? 9:53. Right? If you wanted to, you can put a stop above that just in case it wants to trade into premium. But then you have London lowest target, you have the PM session lowest target, and all of these are session liquidity pools. So that's your true ERL. That's your true sell side liquidity, or buy side liquidity is most times going to be time based. So there needs to be some sort of like a previous X. So it needs to be previous session. It could be London session. It could be PM session from previous day. It could be previous day, high or low. It could be previous week, high or low. All of that is time-based liquidity, right? It's not just a 542 low, relative equal lows. Whilst that's good, as it lines up with the 830 low, you want to be targeting something that has some liquidity significance to it, right? So the distance between here is quite large. But using the context of that kind of stuff, of the 5-minute order flow, the 15-minute order flow, it's much easier to select the direction of the 950 macro. And then using the context of the displacement leg will happen between normally 941 and 950, right? You're waiting for that first 15-minute candle. And this is where my own model, the ETM model I just use to simplify it, first 15-minute prints, you either have a liquidity sweep or for value gap traded into, and preferably with SMT, you have your 5-minute candle or 5-minute order flow, and then candle preferably printing in the direction of the liquidity or the imbalance, your draw on liquidity, you want to wait for that 5-minute candle to print in the direction, because normally you'll have a imbalance on the 1 minute that can pair up with whatever entry you're trying to go for. So 5-minute order flow and then a 1 minute fair value gap entry within macro time. And it's going to be a civvy if you're short, BISI if bias is bullish. And then the two kind of entries will either be discount or premium or a breaker. Okay, if you want to screenshot this, you can. I'll screenshot and put it in the public stage chat if you want to go back. How am I supposed to know when to trade off the breaker and when to trade the fair value gap in premium or discount? It's a good question. Normally, it's a little bit difficult to see. What you could do is looking at the SMT. So if you have something like this, where you have one that runs the higher high, and then one that fails to run the higher high, what you'll normally get is the one that actually runs the stops normally will have the breaker. And you can use a breaker set up in here. And then the one that fails to run the stops will have a fair value gap in premium or discount of that child dealing range or even the parent dealing range in here. You'll find the fair value gap that lines up with it. And normally on the one that has the fair value gap in premium or discount, you can also mark out a bearish order block, since price will normally like to reach up into a bearish order block. Even on the one that has the breakers, you'll have a bearish order block in the displacement leg that price will reach up into as well. Like in here, every single fair value gap you can normally narrow down either into a order block or an inversion order block. So in this case, you have an order block here. We'll go back to the other ones really quickly. What do we have here? Fair value gap in premium. And this would just be your change in state delivery order block. So this one, technically. And then if you're waiting for the ladder entry, you have a fair value gap here in premium of this dealing range. And then your order block would be this, right? If you've been here for a while, if you've been on the streams for a while, you know that if there's a volume imbalance present within a order block that is consecutive candles, so meaning there's consecutive candles that create the order block, the volume imbalance will actually shrink the selected order block. So if your full order block is this, right? Like technically it's from wick to wick if you want to use the entire thing, just to be all inclusive. You want to narrow it down, be more precise, you use the candle bodies, which is I feel like what most people use. If you want to be even more precise, this is not required, obviously, but if you want to be even more precise, notice how there's a volume imbalance right here between the 954 and the 955 candles. You can actually shrink the order block to here. And that's when you're going to get your most reactive area in price. And you can go back and study this. This is from ICT's private lectures. I think it's the price action model 6 or 7 that he released back in December, that he mentioned this kind of stuff. I think this is not like even a lot of people don't even know about this because it's not really been publicly released. Well, it is publicly released, but I don't think a lot of people watched that video. But if you go back and look at this, like here you have a entire consecutive order block range, but then there's a tiny volume imbalance here. Boy, that's low probability anyways. But if you just go back and study it, I think it's a little bit more precise to see. But going back to what I was saying, you have the order block with the fair value up here there. If you go to Thursday's price action, same thing in here. Fair value gap. What's this next to it? You have a bearish order block, right? Wednesday's price action. We already got that one, but you have a bearish order block paired with the fair value gap, right? Technically, this is a really, really tiny mitigation block, but don't have to worry about that. Tuesday was, the breaker, which is also, breaker is an order block, right? So breaker is an order block, mitigation blocks are order blocks, and then the regular standard expansion order blocks are ones that everyone's used to. So yeah, these two, this is going to be a breaker. So to answer your question, really long answer. The one that creates the run on stops normally will have the breaker. the one that fails to run the stops with the SMT, normally will have the premium to discount. Your safest option is going to be this one. So no matter if there's a breaker or not, your safest option is always going to be just trusting the premium or discount of the dealing range. This does happen more rarely. It's more rare, but this is where you would have to potentially have a mistrade where it does not actually reach all the way up to premium, which is fine. You know, sometimes a model is going to produce losses or just a mistrade opportunity. It's part of the game, right? Every single model is going to have missed opportunities, and every single model is going to produce losses. Trying to mitigate all those losses and missed opportunities will end up prolonging the experience. But it was just kind of a quick one today. I don't really have too much more I wanted to talk about. Tomorrow we'll have the actual Q&A and backtesting. So if you got a ton of questions or something that we want to backtest for like an hour or so, we can bring that up. I will post this. It's about 21 minutes long. I think I'll just post it publicly because I think there's probably some value in here that some people will get out of it. What time tomorrow? Plan for the morning. I would say maybe like 11 o'clock or so. I don't know. I'll send out a ping. Maybe like 30 minutes or an hour before to let you guys know. And then we'll just put it up in the public stage again. It'll be recorded even if you miss it. And then I'll post that after. Do you only trade the 950 macro? Yeah, I only look at the morning session between 9:30 and 11 o'clock. And yeah, most times it's going to be within the macro time. The only time I'm not trading the 950 macro is on 8:30 news days, when there is occasionally an entry between 9:30 and 10 o'clock. So if there's an 8:30 news day, occasionally you'll get an entry before the macro time. But it has to be, you know, there has to be everything in play. There has to be SMT. There has to be, normally it's going to be a breaker setup instead of a fair value up and premium or discount. But there's a whole lot of stuff that goes into that for sure. But yeah, like if I was to tell someone like what's the time you should look for trading indices, it's always going to be the morning session has the most volatility. And then I would say if you're struggling to find entries, just wait for 950, because on days like today where we have two Judah swings, like you have, if I mark on 930 here, someone's going to see this as basically two Judah swings where you have a Judah swing lower, taking out the sell stops, and then another Judah swing up here, taking out the buy stops. Waiting for 950 macro is just going to be extremely helpful because all that manipulation is normally done by then. Occasionally there'll be manipulation into 10 o'clock, which if you have 10 a.m. news, that's prevalent. Or if it's just a kind of a delayed low probability day, like say it's a day before 8:30 news, like on Monday of this week was difficult. You'll have examples like that. There was SMT. If you look at, let me pull up the chart really quick. So you're looking at, by the way, tip about SMT. I've mentioned this on the private streams, but if you're looking at SMT for the morning session, most of your SMT is going to be between 5 a.m. and 9:30 a.m. Okay, it's going to be between New York Standard Time, 5 a.m. and 9:30 a.m. Occasionally, it's going to be higher time frame, something like the 4-hour or the daily, when there's going to be like seasonal influence or just a higher time frame SMT. Let me actually write this down. So if you want to screenshot it, you can. So 5 a.m. to 9:30 is where your SMT is going to form most times. Occasionally, it's going to be on the higher time frame. This will be like seasonal influence or quarterly shifts. Or the only exception that I'm looking at besides the 5 to 9:30 is when there's going to be London high or low SMT or previous day X SMT. So like previous day low on ES was ran out and previous day low on NASDAQ wasn't ran out. Like that's pretty substantial SMT. Or if like London high or London low wasn't ran out and it's not obvious. These are really the three main ones. The higher time frame seasonal influence should just be giving you a higher time frame bias anyways. Like if you look at the daily chart really quickly over here, you have SMT here with ES, I believe. And that's your 20-day up to look back would be these lows. 40-day up to look back would be these lows. 60-day, I think, is this one. I don't know. But the SMT from today was on YM and NASDAQ. I zoom in here. Here's your SMT. Hopefully you can see this. Right. Another tip, 80% of your SMT is going to be between NASDAQ and ES. 20% of it is going to be between NASDAQ and YM. That's just kind of it's not a 100% like that. That percentage is just kind of pulled out of my butt. But like just from backtesting, and I'm sure people can vouch for it, that most the high quality SMT is going to be between NASDAQ and ES. And then like a very small portion will be between NASDAQ or ES and YM. But very, very rare. Which asset to trade one SMT? Normally, like if you're comfortable trading all three assets, it's going to be the weaker one when you're bearish, the stronger one when you're bullish. I just prefer to trade NASDAQ all the time. So that's going to be the one that, even if it's the stronger one, like in this case, we're the one running the stops. And even though YM's weaker, I'm still looking at NASDAQ to form the setup, just because I'm comfortable with the speed of price action on NASDAQ and just how the ranges of candles and all that stuff works. But if you go to YM, like if I cycle back and we look at the setup from today, you can still see it's still a good setup, and all the same stuff applies. Like if you have 950 macro, you've got fair value up here in premium this dealing range, a little bit more accumulation in this range. Obviously there's no breaker, right? The breaker will form most times on the in this case, if we're bearish, the stronger one. But fair value gap in premium, and then it trades up into it at, what is this? 957. You also could use this for value up here. For value up in there. 950 reaches, actually no, still 957. 1002, and then last opportunity at 1013, and then it wilts lower. And we have a decent range. And then you have a low put in here at 1032, which would have been fine to trust. But yeah. Unless there's any more questions, I think we'll wrap it up there. Plan for tomorrow around, I don't know. I'm not going to say a time because it does change, tend to switch just based on availability. So hopefully the quick little stream was insightful. How long was this? 28 minutes. Hopefully it wasn't boring and you gained something, at least one thing out of it. If you're in the private group, I will see you. If private group, I'll for sure see you on Tuesday, but all the rest of everyone, hopefully I can see you tomorrow for another Q&A/backtesting stream. So take care of the rest of your Friday night and stay safe, and I'll see you guys soon. Peace.